Hi everybody and welcome back to Markonomics 101 presents Hoot Loot. Today is going to be an amazing show as we take you through the reality of history in the financial markets like you've never seen or will ever seen in your lifetimes. It's just good to know what's really going on. Today's show is called How to Protect Yourself Against a Coming Surge in Interest Rates. There is a ticking time bomb coming right at you. It's called interest rates. We're going to talk about that and how it's going to affect more people, more fast, and more quickly than anyone right now believes. We have euphoria out there, but, well, there's some ways to protect yourself and get ahead of the game, and there's some ways even to make money from it. So we don't want to see you get slaughtered. We want to see you prosper. And if you would, we appreciate all the likes and subscribes that we've been getting, so much so that we're doing a giveaway at the end of the month. $200 to anybody who's a subscriber through the end of February. And if that doesn't entice you, then I don't know what does, because $200 is all I have. You know, I'm pretty broke otherwise. Anyway, well, we're going to come back with the charts in just a minute. Hi everybody, welcome back. We're going to go to the charts, and the reason I do charts, by the way, is that they give a pictorial view of all the information that is known about a particular company by the marketplace and incorporated into it. They give you a roadmap and they give you guidelines as to how you should view a particular situation. I'm going to explain exactly what I'm talking about. The Dow Jones is still in an ascending wedge. What that means is that it's still got a little ways to go in all likelihood. The banks seem to be doing really well. They were basically crapping out before, now they're all of a sudden really good. So the Dow, not yet ready to turn, but you know, this is not a good pattern. This is a long period of time, and there are a lot of dumb people right now chasing everything for every reason possible. We talked about Apple last week. I'm going to say it again. Apple's market cap is worth more than all but 7 countries' GDP. That's called a bubble. That's called absurd. That's called ridiculous. All right. At least I came up with a name for it. All right, so NASDAQ 100 is still pretty much of a healthy uptrend, but you'll notice something here too. It's narrowly contained. It's not like moving in big chunks. So what you're seeing is a lot of churning. You're not seeing, you know, sort of buying and less selling and moving the price. You're seeing the price barely move. You know, it's kind of just churning and selling and buying and churning. That just is not typically good market behavior. If we blow up the NASDAQ to be 2-hour intervals instead of full day intervals, you get about a 3.5 month chart. And you notice, look how narrow that little red trend channel is, you know, toward the end of the graph. And, you know, we broke down beneath that today. Could it mean something? I don't know. I mean, I'm not going to say that this means everything. It could turn on a dime and keep going. But the point is that there are more and more signs of this happening. There are some signs of it not happening. We have to keep an open mind. What's pro? What's con? What are the odds? The reason I'm in a casino here is because the market's all odds. And the thing about the market that I like, and well, actually the thing I like about the casino, odds are all mine. The thing about the market, oh my God, I have to battle against, you know, all those smart folks. So in any event, Standard & Poor's 500, same kind of thing. Again, very narrow trend channel. This means an awful lot of trading and churning is going into this thing, and it's not moving anywhere. So in general, it's hard to quantify. That's one of those experiential things that I'll tell you that is really hard to actually quantify it. The S&P Small Cap Index. Okay, now this index has been performing really well. It's been a sign of speculative, you know, exhaustion and speculative euphoria and fever and all that kind of stuff. And it did break out above what we called an island. An island is kind of a neat little formation because if it usually occurs when there's a gap before it, then there's trading in a narrow range and then a gap right after it. If the gap occurs down, you've got all those people trapped in that blue box that are underwater. So, you know, it tends to be a pretty negative sign. What isn't positive about this is you will notice that it just barely broke out of that thing and it's just kind of curling over itself. So, you know, a lot of the energy just seems to be out of the market. You know, it seems to, it feels kind of old, like, like some people I know. There's a couple of people I know that are old, but, well, I come to think of it, I'm kind of old. But, oh well, it's kind of fun to be old because you know everything. Well, I don't know everything, I know a few things. Okay, so we're going to go on to the Dow Jones Transportation. What's important about these companies in particular is that they move goods all around the country. And, there's nothing more correlated than to the economy than consumer spending and transportation. And transportation is usually part of consumer spending because they spend and they have everything delivered. So, you need to keep an eye on this. And it has just made a slight new high. It's still in a 7-point reverse wave. I've not changed my opinion on this one bit. This is a sign that the economy is gonna catch fire for a little bit because we've seen some of the evidence with the autos and all that in prior shows. But it also doesn't have a whole lot of output in it. It's going to be mostly prices. It's going to be stagflation, and that's scary. Stagflation is scary. So, if you're around in the 70s, and I was, although I was just barely a baby in 1979, barely born. But having read history books, there are things like gas lines and price controls and things like that, and you just don't want to see that kind of stuff. That was stagflation, where there was a recession and 13% inflation. So you paid more for less every year. Uh, now, now we're going to go on to inflation because there really is no bigger story that in interest rates and all that, how it's going to affect your life. This is a commodity research bureau. This is just a basket of commodities. This index has been around forever. Look at this thing. It has made a new high for the year in like record time. Okay, and we're going to talk about where that's coming from. Um, this is a 5-year chart of the Commodity Research Bureau basket of commodities. This thing is almost at a 5-year high. I mean, that tells you something right there. And gold is not even going up. So gold's kind of sitting there, languishing. But whether it's, well, we're going to show you in a minute. Right here, unleaded gasoline. Look at that. Just sprung up in the last couple of days. It just like burst out. You'd think there's no gasoline around. Well, I don't know. I think it might have something to do with that global warming, outbreak in Houston, Texas, where they're having those record high temperatures, and people don't, people are running their air conditioners real hot or something like that. I don't know. But unleaded gasoline is soaring, so it has a lot. It has a lot to do with the Houston situation, but not much. And actually, it has a lot to do with the fact that markets gyrate like pendulums, and so they go a little too far and they go a little too far this way. And in this case, it went all the way down to practically negative money. You actually had to pay people to store your oil, within the last year. I've never heard of negative priced oil. But in any event, now it's $60. Actually, I'm going to go to it now. Now, this is West Texas Intermediate crude. This is the benchmark crude of, in Texas. And it's amazing. It's blown through $60 a barrel. It went from practically negative to $60 a barrel in a year. Well, I'll tell you this: shale oil starts to become profitable around 55 to 60. There's an awful lot of brokerage firms out there, pumping big oil and all that. Even Warren Buffett has bought Chevron, apparently, according to 13F filings. But I'll tell you this: the shale oil guys, all they got to do is just start working it back up again. And shale oil is relatively economic at $60 a barrel. I mean, at 70, it's doing pretty good. So, that's something. It kind of keeps the cap on oil. I just think this is an inventory issue, and that's about it. Copper miners is another sign of inflation. Oil and copper are probably the two biggest, commodities that are used in home building, in so many things with copper. And then, of course, oil goes to, or petroleum products through everything, whether it's candles or wax or, even, plastics. I mean, it's basically, it's a universal commodity. And so when it goes up and when it goes down, it's not immediately felt, but it is felt eventually as it filters through the system. So right now, we're going to say some stuff filtered through the system. All right. Here's the thing. Yields on 10-year treasuries. We've been talking about this thing about 10-year yields for I don't know how long, but I've said this is in a rounding bottom. We're never going to see rates like this again. 38 years of declining interest rates. The last time Paul Volcker was chairman of the Fed and interest rates were at 18% or something, or the prime rate was at like 20, 18%. It was really high. But the point is, we have had rates come down for almost 4 decades. They have nowhere to go. I mean, I guess it could go negative, but I don't think they're going to at this point. Yields on 30 years, even more scary. I mean, look at that. We're already past 2%. So if you if you, we've seen almost a percent increase in this 30-year bond, and I'll tell you what it does. Okay, the 30, the yields on our paper, okay, is good for the dollar. Now let me explain why. Because Germany has negative rates, Japan has negative rates, UK has negative rates, Italy, France, almost everybody has some negative rates, and even if they're positive, they're like 0.2. We, on the other hand, have got a whopping 2.07 30-year bond. Well, if you need to put some money into fixed income, are you going to put it into negative 0.7 basis points in Germany and get paid back less than you put in? Or are you going to get something like this? Well, I think this is actually drawing in dollars and keeping the dollar strong. So, but I'll tell you this, there's nothing bad or good about higher rates. Okay, I want to make that clear, that I'm not saying higher rates are bad. I'm saying that higher rates mean more for savers and less for borrowers. Okay, more costly for borrowers and more for savers. That needs to be at equilibrium for an economy to be at equilibrium. For the Fed to have shoved the beach ball under the water for the last 10 years, oh my God, I can barely think of the misallocation of all the crummy projects that were done and all that kind of stuff. Because when you borrow at practically nothing, you don't have to make a whole lot of money. You have to make like nothing. So your project can be really crappy and just the borrowing costs justify it. And that's no way to make an economy efficient. And God knows our economy is hardly efficient. Now here's a way to protect yourself. One way to protect yourself against higher rates. This is called the ProShares Ultra Short 20-Year Treasury ETF. Notice that it's rising and breaking out the same way the long bond is breaking out. So if you've got like some kind of exposure to higher rates, for example, a variable rate mortgage, any kind of variable rate debt, it could credit cards, obviously. Next time rates go up by a quarter, they're likely to raise them to 30%, because God, they're like at 20 right now with rates at 0. But this is the thing to buy. This thing will actually hedge, interest rate exposure. It's like being short a long bond. So, if your mortgage is not fixed and you can't fix it, you might buy some of this, because this thing will act inversely, and it will keep you whole. Whereas if you have a variable mortgage, you're going to be paying more and more and more and more. Well, this thing will give you capital gains. So when rates go up, so it's a really, really neat tool to use. Grayscale Bitcoin Trust. I don't know what to say about it. I have no idea where Bitcoin is going. I do know it has value. Do you? I have yet to meet somebody that knows why Bitcoin has value. And I'll tell you what, if someone can actually tell me in writing, in a comment, why Bitcoin has value, I'll get you $100. How's that? I'll bet you don't know the answer, and I'm going to give it to you next time. All right. We're going to look at some of the mega tech companies right now. This is an important one. Apple. Ooh, I don't know if an apple a day is keeping the doctor away. This one just broke its uptrend today, and it looks like it's making a rounding top. Now this is the most valuable company in the world. Warren Buffett owns a ton of it. I said earlier, bigger than all but 7 economies in the world, including Germany, including China. I mean, those are like 2. In the United States, 3. I think the other ones are like Japan and a couple others, maybe France. But the point is, we're talking about a company that's so highly valued. And that it just it's beyond it's beyond the realm of imagination. Um, Amazon's actually looking good. Uh, I thought that with Jeff Bezos leaving, that Amazon, might take a little bit of a dive. Doesn't look like it though. Still looks pretty healthy to me. Facebook also looks healthy. I'm not going to do any fact checking today. All I have to say, is Mark Zuckerberg is always right, and that's all there is to it. And whatever facts need to be put in to justify that, we're all there. Hoot Loot loves the truth. Remember, be informed, be amused, but never be misled. Right here. Don't watch the cable news and listen to people like that. God, that'll cause mental illness. If you just look at them, you can see. Okay, Google, another company that's just beautiful pattern. I don't know how this thing keeps going up, but I have no argument with it. I mean, I think it's somewhat exhausted. It's somewhat overvalued. But on the other hand, it keeps going up. You have no argument with the pattern. When you have this many companies pulling up the NASDAQ, until these companies break down, you're not going to really have the NASDAQ break down. Except this. When interest rates go up, PEs go down. Okay, let me explain that to you. Price earnings ratio, okay, is sort of like an earnings yield of a stock. Okay, if it earns $10 and it's trading at 200, it trades at a 20 yield or 20 times PE. Flip it over, $10 of earnings for $200 of value. That's called a 5% earnings yield. So when you have rates go up, they become competitors to stocks which pay a dividend. And so every asset goes down in value by definition because the interest rate is the discount rate of the future cash flows. So it affects everything. And the only thing it doesn't affect as much are hard assets, but it even affects those a little bit too. We're going to get to that in a second. All right, Microsoft, great pattern. Doesn't look like too much oomph though. You can kind of see it curling over. So there is a good chance that by the next time, on Saturday when we're doing our weekly roundup, some of these could be starting to break down. So, we're keeping an eye on it, not counting on it. Not enough yet to really get too excited about. NVIDIA, another, semiconductor. God, these things never go down. I don't understand this. There are so many semiconductor companies in the world. There's just thousands of them, and there's still a shortage of chips. I don't get it. I got chips all over the place. Chips ahoy too, if you want a nice cookie. All right. So, NVIDIA has been like a juggernaut. I mean, this thing just always goes up. It's like 100, 200, 300, 400. But it's kind of laboring a little bit. If you notice, none of these are really cooking. I mean, Google a little bit, but not the rest of them. They're getting kind of tired. Oh, my favorite. Elon is not coming here anymore. He is so furious at me for doubting SpaceX at $74 billion. He is never going to come here again, is what he says. Vapor no. And, well, what are you going to do? Tesla is another one of those. This is a fantasy name. I know a lot of people out there like, oh, God, Tesla's the thing of the future, blah, blah. Maybe, but a lot of things are the thing of the future, and you're not going to pay that much for them. Okay, there are things that are futuristic, like that you just don't have to pay for. This Tesla is worth more than more than all but the top 15 countries. And it only sells 500,000 cars a year out of 20, 25 million worldwide, something like that. How does it become such a big factor? Well, I'll tell you, it's not. Right now, I think Elon Musk was very fortunate to have, the short sellers because they propelled him higher. And, when you have a lot of short interest in a stock, one of the reasons I never have said sell Tesla, I've said avoid it. Because I don't understand it, number one. If you look at the financials, I don't think it's ever made any actually cash flow profit. It makes all kinds of weird stuff. And it's really hard to justify a value like that, especially when you have all these competitors coming out that are not exactly too shabby, like Porsche and the Cayenne and Audi just came out with one, and Ford and Chrysler, Ford, General Motors, and Chrysler, all of a sudden they discovered electric cars. So Elon's going to have a little bit of a tough time on his hands. I think that he may have underestimated the competition because there are some that appear to be more efficient. And I'm not an expert, so I'm not making that. I'm just saying there are reports that by people who claim to know. And, he's again, today's latest is I think he and Putin are going to do some 420 in Russia. I think he's trying to get that law liberalized there. He must own some pot stocks too. All right, enough of him. Costco retail sector still weak, hasn't broken down, but still weak. So we got to keep an eye on that. Federal Express, kind of rallying a little bit, but doesn't look good. I mean, this is a key company. JP Morgan, this is the big bank. Warren Buffett just sold a big chunk of his JP Morgan, and it's not that I'll tell you, it's kind of getting up there, in price. Did make a new high. I think there's a mistaken impression by investors that long high rates and low short rates are good for JP Morgan and other banks. Well, yes, that's kind of true because a bank typically lends long at a higher rate and borrows short at a lower rate, makes a spread. The problem is all their assets are denominated, in dollars, and if you have higher interest rates, every single asset on their balance sheet has gone down in value. So, yeah, you might get a little bit of incremental business with a higher margin, but your whole balance sheet just got tanked. So, I'm not quite sure why this is good news for anybody, but we'll see. I mean, it's good news for savers, and it's good news for a lot of us that want to see the economy at equilibrium. I mean, I'd like to save. I can't stand this, going to the bank and having to pay them to store my money. So, I don't like that. I don't like that one bit. Actually, I don't really pay them to store my money, but, pretty close. I mean, zero interest rates. What else are you doing? Target looking good again. I thought this one was breaking down. Retail still looks pretty good. I mean, there's like a little bit here and a little bit there. So much of this market is so hard to trade. It's so hard to figure out because it's choppy. It's like it's very casino-like here. I mean, it makes me not want to do anything because the temptation is so great. I've been sitting here on, like, come on, come on, come on, like the way gambling addict might feel, because it's so exciting. But you have to get over that because the minute you're excited about putting money in the market is the minute the market's exciting about taking it out of your hands. UPS also, here's another transportation company, not looking so hot. So here's sort of one in the negative column. Visa kind of neutral. Again, retail sales. So you kind of have a little bit plus, a little bit minus. I'm not quite sure where things are going. Walmart, may break out, may not, in a kind of a triangle pattern. Again, the economy, we're not quite sure which way it's going to go right now. All signs say that way. Gold. It is unbelievable to me that gold could behave so badly for so long, while the dollar's getting tanked. And that part just kind of blows my mind. But I think a lot of at least in the last couple of days, it's had to do with higher interest rates. Higher interest rates are not good for gold, temporarily. Usually you have higher interest rates when you have higher inflation. That's good for gold because the dollar's going down in value. Okay? And gold is denominated in dollars, so it has to go up if the dollar goes down. So in the case of gold, I think the higher rates are temporarily kind of putting the brakes on it. And even though I still look at this and I still think not a bad looking chart, too early still. Too early. Now, and so, we just have to be patient with this one. Now we're at silver. Silver's looking better than gold. There are rumors that there's a short squeeze out there that the Reddit rebels tried to work. Silver's just too big of a market. And I don't care who you are. I don't care if the Bass Brothers couldn't corner it. For all you Reddit rebels who weren't around in 1980, the Bass Brothers practically cornered the silver market, got it up to $50 $50 an ounce when gold was at $8.50, and they lost everything trying to do that because they're not bigger than the market, even though they're billionaires. So, just keep that in mind. Silver looks really good, sort of long intermediate term, and if you got on board at the right time, you could probably propel it. But you got on board at the wrong time. The market wasn't ready for you yet. This is just one I'm going to show you. One stock, SSR Mining. It's a real high quality company. But look at that, just broke down. And you don't want to see the miners not doing well. They're kind of like right on the edge. And with oil prices going up, that's their biggest cost. And gold going down and silver not doing all that. Silver may go up. It looks like it's going to go up. But right now, a lot of these stocks are not behaving very well. And there'll be a better time. A couple sectors, money center banks, pretty much maybe making a double top, maybe making a new high, but they're looking really good. Broker dealer index, unbelievable. Look at that parabolic pattern. And why wouldn't you be thrilled to be a broker dealer and bring SpaceX public at $74 billion? Do you know how much commission Goldman Sachs is likely to make? I don't know who Tesla's banker is or SpaceX's banker is, but 74 billion dollars for a company whose ship blew over on one of the Houston pads. I don't quite get that, but there's some other things I'm going to show you that are even weirder than that. Big oil is getting a lot of fans now. A lot of the brokerage firms are recommending, like Goldman Sachs is saying, just go hog wild in big oil. Warren Buffett has bought some Chevron. I mentioned that earlier. I'm going to say this. I think it's going to go higher. I think it will break above that 950. I think there are going to be some good, things in it because they tend to have really good dividends at some point when they can get decent prices for their oil. So the only thing about it is, again, I'm going to say this again, watch out for shale because shale comes on really fast. It comes on like 1 million barrels a month. And it gets profitable around 55, 60, and these guys make much lighter oil. It's better oil, and so all that stuff you hear about shale oil companies not being able to make it. Well, they can kind of make it. They just need a little higher price. The airline index is probably the most ridiculous thing I have ever seen in my life. I mean, these are broken up. I mean, look at this. It's actually breaking up. And from what I've read today, not only do we have half the planes, this is a report, we have half the planes sitting in large parking lots doing nothing. We have all of the airlines begging for bailout money on a monthly basis and laying people off. The planes are half full. The routes are half full. The hubs are half full. How on earth do you see airlines going up in value? I don't know, but that's the market for you. You cannot fight it. You cannot let logic get in the way of reading the chart. Okay. And now we're getting to my favorite part because I'm going to show you some really great companies. And for the long run, and these are cheap, so you're not going to be buying high and trying to sell to some idiot even higher. But these are long run. Now, right now, I might not want to go jumping into them immediately, but Aurora Cannabis, there have been so many buyouts now in the cannabis sector. I think at least 2. I think this is another possible buyout candidate. Very hard to trade, but it's right back to its line. And I think that this has got so much long-term potential here that, when it comes down that much, 40, 50% in a couple of days, a lot of stocks take like 2 weeks to kind of just churn around like that. This thing just came right back. Probably just got a bunch of people out of it who'd just gotten into it. Again, this is Aurora, and you can see that you got to watch out how you trade this thing because it tends to have 50% really flash drawdowns. So it's the kind of thing you get out when you can, and you get back in when you can. Canopy Growth, again, same kind of thing. This is the second largest company. I have a feeling they might be out, looking for an acquisition target. They're owned 30% by Constellation Brands. This thing's going somewhere. There's no doubt this thing has value. This is the blue chip of the cannabis sector, if there ever was one. Chronos Group is another one that I like. It hasn't moved that much, which is kind of why I like it. So you're not really chasing it here, and it has clearly been to much higher areas. And so, even though you're kind of paying up for a little bit, I don't think this is bad because, from what I can tell, these are in a long-run bull market. These are going to go way higher. I just don't know how much higher. I don't know how fast, but you're going to see much higher prices. Hexo is one I've talked about before. This is the most treacherous company. And here, I didn't even put in number 8 on this graph, but you can see here again, it basically went down 50% in value. And here it is up again today. But this thing has gone from like 1 to 11. So, yeah, who can argue with that? But you just have to be really careful about getting shaken out on these snapbacks. That's why most people can't hold on for the long term, is because these snapbacks are so scary. And finally, we're going to end up with Tilray, my favorite. This one, I honestly think if you had to buy one company, I would buy this one and just hold it for a while. Tilray broke out of a massive bullish slight trend channel after being as high as $300 a share. Came out at 20 in its IPO. So unlike Zoom, which I don't remember what it came out, it's probably trading at like 5,000 now. But Tilray is still trading around 30. And that's not so bad, really, when you think about it. And that they've just merged with Afria, and they just announced earnings this afternoon, believe it or not, and they almost broke even. These companies are now almost breaking even with the kind of growth potential they have. Unbelievable. And finally, Tilray. This is sort of a much shorter time frame, and there's a much better entry point right now. I don't actually think it's a bad idea to buy some Tilray down here. Down around the 30 area, gives you another chance to get in. You've seen it go up to 70. If it ran up to 70 again, I would not advise you to hold it. But, Tilray can just as easily get to $200-300. We have no idea. What we do know about cannabis is more uses of it, more acquisitions. There are more mergers and companies buying each other. Tilray bought Afria. There's Hexo that can be bought. Aurora Cannabis can be bought. There's a bunch of other smaller ones. This is going to be where the action is. And if there's anything that'll make you high and calm you down, it's got to be making money. So in any event, I hope you like and subscribe. Right above my head is a big like and subscribe thing. And thanks for tuning in. We will see you next Saturday. You're gonna get some more incredible stuff as we go through this journey of truth together. Be informed, be amused, but never be misled. Markonomics 101 signing out. We love you guys.